Are we live? Oh, right. Okay. Good morning, everyone, and happy new month to you. It's the first trading day of the month, the first trading day of the week, and I'm so excited to welcome you all to yet another promising edition of our Forex Morning Mastery, our first edition for the new month. I hope we all had a wonderful weekend out there and pumped up and ready to be part of another possibility as we enter into the new week and, of course, the new month. And being the first trading day of the month, it's a fresh slate for us to explore new opportunities and strategies. And if we've not done very well in the previous month, it's a new opportunity for us to learn from our mistakes and, of course, make use of the opportunities that comes and on our way. So you're highly welcome on board, and I'm very excited to have you around with me. My own name is Sheriff Daramola, and for the next 1 hour thereabout, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective with the utmost intent of identifying practical entry points during the course of the week. So you are very much welcome. And for those of you who are joining us for the first time, we run the Forex Morning Mastery three times in a week. That is Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UT. So we have a lot of time to be together during the course of the week as we continue to monitor price action. And of course, as we are stepping into a new month, we have a lot of key drivers going on behind the scenes, like the escalating geopolitical tensions and dynamic central bank moves, which has been reshaping the financial landscape in the last couple of weeks. And of course, we are going to be looking at them in order to have a better understanding into what is going on in the market. We'll look at the geopolitical and trade tensions, which are creating volatility in assets such as oil and, of course, currency pairs and the gold commodity as well. And of course, we've seen safe haven and monetary policy expectations surrounding this particular asset that I have mentioned. We will look at that today, and of course we will be breaking down these pivotal drivers, share actionable insights, and discuss strategies to navigate the evolving market conditions. So for this week, as always, we are going to be deliberating on the USDJPY, the USOILSPOT, and of course the XAUUSD. So if you're fan of any of these assets, you do not want to miss out on these valuable ideas we will be deliberating on today. So I will be taking you through these dynamic shifts with clear data driven strategies, and of course grab your favorite beverages and let's dive right into the market. And do not forget to give the video a thumbs up if you have found this content helpful in making your independent trading decisions. I will really appreciate your support. And I see you, Simasiku from Zambia. Good morning to you. Happy to have you around with us this morning. So with that said, here we will be diving right into the business. And as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for this week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now for this week, we have a bunch of high impactful events from both economic dockets. Remember, we are looking at the US and the Japanese economic dockets. And for today, Monday, March 3rd, we are looking at the ISM manufacturing PMI from the United States. Now, this data here is coming in by 3 p.m. UTC. That's about 4 p.m. local time. So we do want to be marking out that timing. And for those of us who do not know, the ISM manufacturing PMI measures the health of the manufacturing sector in the United States. So simply that is what it is all about. And it's an index that ranges between 0 to 100, where anything above 50 is considered as a positive traction for the economy. That is the sector has expanded in the last 30 days, and if the data comes in below 50, it shows that the sector had contracted. And of course, if it expands, it means a very positive signal for the US dollar, and if it contracts, of course, that will be a negative signal for the US dollar. So we look forward to see what the actual data is going to be like. In recent times, it appears that the manufacturing sector has been gradually improving over the last couple of months. If you remember, last year, almost about 7 to 8 months of the whole of last year, the manufacturing sector was consistently under 50. Now, January we saw above 50, and then February as well, and then we're looking at this month now. There is an expectation that the data will come in around 50.8, a little bit lower than the previous month data, but still above the 50 mark. So we look forward to see what the actual data will be. Will it be just as what market had expected, below expectations, or even beyond expectations? So we look forward to see what that is going to say. Now, moving on, we also have another event from the Japanese economic docket. That's about 11:30 p.m. UTC. That's later in the evening today, and that's 12:30 p.m. local time, and it's a labor-oriented data. That is the unemployment rate data. And for the unemployment rate data, it gives us an insight. It measures the percentage of unemployed people in the Japanese economy, and of course, the higher the figure, if the figure comes in higher, it will definitely indicate weakness in the labor market, which influences the strength and direction of the Japanese economy. So if it comes in higher, there's a likelihood that the Japanese yen could drop, and if it comes in lower, it could show a resilience in the Japanese economy. And if you remember, we have been seeing positive data from the Japanese economy in the last couple of weeks, which has helped the yen gain significant traction against the US dollar. We saw a very, very good GDP figure a couple of weeks ago. We saw inflation increase. We saw real wages increases. The labor sector has been doing well. Things have just been rosy for the Japanese economy. So will this continue into this new week? Well, definitely we want to wait to see what the actual data is going to be on that one. Then tomorrow, Tuesday, March 4th, we are looking at a couple of speeches from Fed officials. We have Barkin and Williams all coming 6 p.m. and 7:20 p.m. UTC. So we want to hear what they have to say. It will be giving the market an insight into the Fed's outlook to the U.S. economy and potential monetary policy decisions. So that is another event we want to be looking forward to tomorrow. So these are what we are looking at today and tomorrow. We have the ISM manufacturing PMI. We have the unemployment rate data from the Japanese economy, and of course a bunch of speeches from the Fed officials, that is from the United States, which obviously will be giving us an insight into the market dynamic around the US dollar. So there we have it, and with that said here, we shall move right into the chart. Let's look at what is going on in the market. Now, the first asset we are going to be looking at, of course, is going to be the USOILSPOT. And this morning, the start of the week, I've seen the US oil spots nosedive. Price has been dropping significantly since the beginning of the week, and of course, if we look at the major trend on the US oil spot, it has been to the downside. Since the beginning of the year, I think, yes, since the beginning of the year, it has continued to drop significantly. And will this continue? Well, for us to, before we go into the technical details, let's quickly take a look at the major driver that is influencing this market behind the scenes. Now, one of the major ones is the geopolitical tensions. Of course, we cannot speak about the US crude oil commodity without talking about geopolitical tensions. And of course, recently we saw there is this escalating tension between the US President Trump and Ukrainian leader Zelensky, and along with other concerns over the Russian-Ukraine conflict, which is adding a risk premium to oil prices at the moment. So there is still an uncertainty around that, if the US is going to sign that deal, or there's going to be continued support in terms of military aids to Ukraine from Europe to escalate the war further. So these are things that we need to monitor as we try to trade the US oil commodity. Then we're also going to be looking out for potential buying opportunities, I think, support levels to look out for buying ideas, or resistant level to look out for selling ideas. Then we're also going to be considering the supply disruption in Kurdistan. I think I mentioned this on Wednesday or Friday last week, where 8 international companies in Iraq have stated that they won't restart export through the Ceyhan, despite indications from Baghdad, and this is contributing to supply constraints that could support higher prices due to supply disruption from that particular area. Now, besides all of this that is pointing towards a rise in price, the strong momentum to the downside still looks very much intact if we take into account rising concerns over weakening global demand, fueled by escalating US-China trade tensions, and this obviously has been capping the upside of oil prices in the last couple of weeks. And then we also have the additional tariff announced on China, Canada and Mexican imports, which Donald Trump mentioned that it will take effect tomorrow, 4th of March, and we do not know how the market is going to be reacting to this. We don't know what is going to happen next. Will there be a retaliatory response to that? We don't know yet, and this is further bringing uncertainty into this market. Now, given this, the influence of uncertainty surrounding all of this, we need to stay alert for new developments or escalations, if the case may be, as a sudden increase in conflict risk could drive prices higher in the short term. So if we are going to be bullish, we are going to be considering scaling into long position while keeping a tight stop in case price nosedives. So at this point in time, we are at a critical juncture, and while I was looking at this chart from the 4 hours time frame, this was what I was able to come up with here. So I didn't really go too far. I just looked at the last 4 weeks, no, 2-3 weeks thereabout, to see what is going on. And of course, I can still acknowledge the fact that the downtrend is still there. Now look at the structure you are seeing on your screen right now. You can see price drop. We had a lower low, lower high, then we have a lower low, and then a lower high right here. Now, will this whole movement continue the downtrend scenario, or are we going to see price climb to the upside? Now, within this whole series of lower lows and lower highs is this descending trend line, which appeared to be broken last week. As you can see here, we saw a breakout of this structure on Thursday, and the inability of price to break out of this resistant line at the $70.15 level is like a concern for me. and it appears that buyers, though they've broken out of that trend line, are finding it difficult to maintain the momentum to the upside. So with that said, here I'm looking at the possibility of price retracing back to retest the structure in an attempt to continue an uptrend move. So let's see what happens. We need to exercise patience here. Use the key level here at the $69 area as a reference point to guide our trading decisions going into the new week. And considering the mixed environment with both supportive and restraint factors, it is wise to look for ways to edge our ideas around this area. So it's wise for us to look for ways to edge our ideas around this area. Consider gradual scaling in or out of trades rather than committing all at once due to the uncertainty at this point. The market has a tendency of moving to the upside, likewise has a tendency of moving strongly to the downside. So the key level around the $69 level is going to be playing a significant role to guide our decisions for this week. And of course, let's scale down into our execution time frame to see how market has been reacting to this particular structure since the week has begun. Now to do this, we'll scale down to our execution time frame, and this was what I was able to come up with. Sincerely, I missed out on that sell. I never knew it could go this far, but it's okay. Let's see what happens here. So the first thing I noticed this morning while I was looking at the structure, we can see that for the first 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, price was confined within the $70 35-cent level. As you can see here, that's our first resistance line for the week, and then we have the support line here at the $69.75 area. So it still appears that buyers are finding it difficult to break out of the $70.15 level, and of course you know how we do it. Whenever we identify such a range bound structure, we wait patiently for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And from what we have here, the breakdown of the $69.75 area has already been triggered with over 60 pips in profit at this point in time. Unfortunately, I missed out on that move. So the question now is whether or not price will come back, retest the structure in an attempt to continue the downtrend move. So if that is going to be the case, then I want to be joining a bearish move at that point. So let's see if the market will come back and retest that particular structure. And if it doesn't, and it continues to drop to the downside, then I want to see how the market will react to this key level. Remember, this key level had been a support line since last week, Thursday, as you can see here. So I would like to see how the market will react to this structure. So if price comes in here and it breaks down, retest it, I would love to join a bearish move. So looking out for selling ideas at the breakdown, retest of the $69 area, or let me just place, I will place a sell stop order, and if it gets triggered, I will be alerted. Then I will come to the chart and monitor how price action is behaving around that area. If it shows signs that sellers are persistent, then I will be I will leave the position running. But if I see continued buy pressure there, then this could incite buying ideas. So let me just place a sell stop order below the structure, and let's see how this is going to play out going into our first trading session for the week. Now, if price gets into the $69 area, so let's finish the sell expectations here. So if price drops below the $69 area and we have our sell position triggered, I'm looking at a TP somewhere around this trend line here. That's about 120, 130 pips move thereabouts. So I'm talking about $67.80 level as my TP target for this sell position. So let's place that immediately. $67.80 level. And why is that? Well, I'm looking at price coming back to retest the structure, maybe in an attempt to continue the uptrend move. So let's see what happens if price will retest it or even break it to the downside. Now we have settled our case with the bearish expectations here. Now in terms of bullish ideas, I still want to maintain lookout for the reaction of price here. So if we see price do something like continued buy pressure above this area, showing us signs that sellers are finding it difficult to break through, it could welcome buying ideas for us. So please take note of that, and I will be updating us on my Telegram platform if I see anything like that. And then we look out for more buying ideas at the breakout of the resistant line for this week, which is duly highlighted at the $70.35 level. So that is my simple view on the US All Spot this morning. So let's see how things play out. We've missed out on that sell position. We're looking at a potential retest of structure to join. If that does not happen, a breakdown of the $69 area is what we are looking at to capitalize or probably increase, maximize the bearish move to the downside. So I will take about 5-10 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And don't forget to give that video a thumbs up. Thank you very much, guys. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? Give me a moment, please. So we are moving on to the next asset on our watch list, since there are no comments or observations or clarifications needed. are looking at this morning, it's the USDJPY, and of course the character of price action this morning is revealing a strong bearish tune to this particular market, thanks to hawkish Bank of Japan's expectations, solid domestic data from the Japanese economic docket, and of course there is some fresh selling of the US dollar going on in the market right now, and this has of course put some pressure for external rate hikes. There is this old chatter around the US officials link Japanese yen weakness to monetary policy, and the Bank of Japan could face pressure to act, potentially leading to further supportive moves for the yen at this point in time. And for us to navigate this market, there are a handful of things that we need to also take into account. That is, given the mix of supportive and cautionary signals around this market, we want to consider waiting for upcoming US macroeconomic data like the ISM manufacturing PMI coming up later today. And if we are looking at things from a long-term perspective, then we can be saying we shall wait for the non-farm payroll, which is coming up on Friday, before committing to a large directional trade. Now, besides this, if you are leaning towards the Bank of Japan maintaining or even intensifying its hawkish stance, of course, we will be looking for opportunities to position long for the yen. That is, we'll sell the USD JPY, and this means using options or scaling into our positions rather than going all in. So we are going to be looking at how we are going to be doing that in a moment, while we also keep an eye on US inflation indicators. We saw the US core PCE coming last week Friday at 0.3% uptick, a little bit higher than the previous month, which was at 0.2%, showing signs that there is inflation in the United States, and can provide us with a timely signal to adjust our strategy if there is anything new that comes up today. So let's see, we are looking at the ISM manufacturing PMI today, and we have Barokin's speech coming up 6 p.m. UTC today. So we don't know what the narrative is going to be like, but while we don't know, let's look into the chart and let's see how the market participants are digesting this information. Now, my first point of contact on the USDJPY, I think, is on the daily. Did I do anything? Yes, I did, on the daily time frame. So this was what I was looking at on the daily time frame. The first thing I did actually was to look at the key level for the upcoming week. So what key level am I going to be using for the upcoming week? And when I did that, I think I went to as far back as the year 2022, and I was able to mark out the 149 area, which has played a significant role in determining the direction of price action in the last 3 years. See how at some point it has served as a resistance line, then at some point it has served as a support line. Then if we fast forward to recent times, I'm talking about since October of last year, you can see how the 149.00 area had continued to resist all attempt by the sellers to break through that particular structure. And in fact, when price came back into that level, despite the strength in the Japanese yen, you can see how sellers found it difficult to break through as buyers continued to negate selling pressure around the 149.00 area. So for me, that area is going to be a key determinant of how we are going to be positioning ourselves for the next move this week. If price maintains its momentum above that key level, we want to maintain bullish ideas. As you can see, since October, this area supported uptrend scenario. We saw one happen here, we saw one happen here, and there is a likelihood that this could happen around this area due to the memory for buying power around this area. And look at how many pips price. The first one was about 750, the second one was about 900 to 1,000 pips, as you can see here. So the potential is really strong in favor of the uptrend scenario. Now, with that being said here, The only condition that will make us sell is for that 149 area to be broken to the downside. I'm talking about long-term perspective here, though there are short-term possibilities around selling ideas, which I will be explaining to you in a moment. Now, scaling down into the 4 hours time frame, you can see I did acknowledge the bearish trend, as you will see here. Price had consistently found lower highs since the beginning of this year, as you can see. And then we have below this descending trend line is a structural detail, which you can see here. So we have a descending trend line, and look at how the 149 area has been a demand zone. So I had to label it a demand zone, and we saw what happened last week. Price finally broke out of this descending trend line, giving us a reversal pattern going into the new week. So with a breakout of this reversal pattern, for me, I'm of the opinion that price may likely come back to retest this trend line that was broken on Friday to continue that uptrend scenario. So you get what I'm trying to say there. So so that means that we have a short-term selling expectations. That is, we could see price drop into this area, and that's about 110 pips they're about to catch if price action comes with the intention of retesting that trend line to continue that uptrend move. And if it goes ahead to break down the 149, we could be looking at more selling ideas to maximize the bearish move. And in fact, I have TP for my sell within the 143.8 and the 147.00 area, depending on how aggressive I am based on the structure I see on the chart. Now, currently, if you look at my trading panel, you would have noticed that I already have a sell position triggered on the USDJPY, and I will explain to you why I have sold. Now, scaling down into our execution time frame, the 1 hour time frame, this was what I was able to come up with here. Now, after monitoring the character of price action in the last 10 to 11 hours, we can see that the week started on a strong bearish note. So price started at around the 151.00-ish. That is our resistant line for the week, and then dropped into the 150.250 area. Now, once price got here, what did you see? We saw buy pressure, making it our first support line for the week. And what happened next was this engulfing bearish candle breaking through that support line, did a retest of structure, and that prompted me to sell at the breakdown retest of the support line of that range bound structure. We don't know if this is going to go far. Well, I don't know, but at the moment I have a sell position triggered running with about 6 pips in profit. Hopefully it moves as expected. So I'm looking at the possibility of price dropping into that demand zone or that descending trend line, dovetailing to about 100 pips thereabout. So my TP is around the 149.00 area. That's about 100 pips on that particular one. So we will continue to monitor price action around this area. So I maintain a temporary bearish expectation, while as soon as price comes into the structure, I want to see if the market is going to be retesting the structure to continue an uptrend move. Well, a double bottom or any form of reversal pattern around that area will give us some confidence to join a buy if price ever comes into that area. So till then, we continue to monitor price action around this area, and I will be giving us updates on my Telegram platform as at when due. So that is what I'm looking at the moment. Short-term bearish idea with the hopes of looking at a long-term buy around the descending trend line and that demand zone we identified here. So let's see what happens if price will come that far, and if that does not happen, we get taken out of that sell position. Well, continued buy pressure here will give me an opportunity to continue the uptrend move, as price will be back above the support line for the week at the 150.250 area. So I want to wish us all the best of luck on the USDJPY. So this is where our center of focus is going to be for today. So let's see what happens around this particular area. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right. So in the absence of none, I want to take that as a confirmation that we are all on the same page. So with that said, let's move right into the final asset on our watch list for today. Stay tuned in. Asset we are looking at today is the gold commodity. It is known as the XAUUSD, and we are not going to be analyzing the higher time frame on this one. I already did a top-down analysis on the gold video on the gold market during the weekend, and I shared it on my platform here on my trading view and of course on my Telegram platform. So for all of you who are part of that community, you definitely must have seen what the top-down analysis is looking like. However, for those of you who are new, who are yet to see this analysis, I'll advise you to go to my Telegram platform, Trading View, or right here on YouTube. You will see the video where I analyze what the market is looking like from the higher time frame. So in this session, we are going to be focusing on the execution time frame, which is the 1 hour time frame. And of course, the current setup you are seeing on the chart right now, I already shared it with you on my Telegram and Trading View. And as you can see in the trading panel at the bottom of your screen, I already have 2 buy positions triggered on this particular asset, and I will explain to you why I have bought. But before we go into that technical details, it's important for us to know what the background in this market is looking like, the interplay in the background is looking like. Now, as at yesterday, while I was looking at my financial feeds, the majority of market participants currently are pricing in the possibility of the Fed cutting interest rate twice by year end amidst weakening consumer sentiment. We saw the US consumer sentiment come in way too low. On Tuesday of last week, we saw about 93.7 as against the previous month, which was at 104. And for me, for economists, that is quite a woeful figure. It shows that consumers are not spending money in the economy, and there was this narrative that says that it is due to the winter period. Spending is always low during winter period. Well, that is a bucket one can stand in, but at the moment, the fact is that consumer spending is low, and this Fed might likely be considering cutting interest rates. Then secondly, there is this concerns over US President Trump's tariffs plan and the risk of a global trade war, which usually or which conventionally drives demand for safe haven assets such as gold. And if we look at that narrative, just last week we learned that the tariff on Canadian, Mexican, and Chinese goods are going to take effect tomorrow, 4th of March. And at the moment, no one knows what the outcome is going to be like. Will there be retaliatory measures? What is going to happen next? No one knows yet. So the market is a little bit uncertain at this point in time, and this could drive capital flows from other currencies into the gold commodity. And of course, the dollar is not doing very well at the moment, and this makes the gold much more cheaper for investors to put their funds in. So there is a very strong tendency for this market to continue to rise. So due to this narrative here, and considering the structure I saw on the chart after monitoring the character of price action since the beginning of the week, I can see that the momentum for the week started on a strong note. We saw a bullish traction. We had an engulfing bullish candle springing out of the 2008.57.50, though we had a resistant line at the 2008.77. But the fact here is that sellers are struggling to break through the support line. And if we look at the character of the candles in the last 1, 2, 3, 4, 5, 6, you can see we have, out of the 6 hours, we have like 5 hammer candles. And what does 5 hammer candles tells us? It tells us that buyers are present in the market. So due to this observation, I decided to place 2 buy positions, and of course both of them are currently running in a total of 80 pips at the moment. And I think it's high time I move some stop losses to secure some of this profits. As you can see, let me do that right away. So let me put this at 2866. That's for the first buy position. And of course the second one, I think I will still leave the second one to run, and if price goes ahead to break out of the 2008.77, I will be adding more buy positions to my existing trade. So I will place another buy stop order at the break of that resistant line. So I advise you to do so as well. So let me do that right away. Good. Now, for those who have joined this bullish move, well done to you. Kudos to you. Now, for those who are yet to do so, I will suggest that let's look out for buying ideas around the 2006.87. So we have a breakout already. Let's see if price will come back, retest the structure, then we can actually join that uptrend scenario from that particular area. So the path of least resistance for the gold commodity is looking very, very bullish at this particular point in time. However, you know how we do it in this community. We always try to keep be on our toes, be on standby for a reversal just in case price moves in the opposite direction. Remember, the market, this business is an uncertain environment. Anything could actually happen within a twinkle of an eye. Now, of course, if we consider the general positive risk tone in the market, we expect a limiting in the cap of this uptrend scenario. The equity market is doing very well at the moment, and there is a high chance that investors move their funds to the equity market, which could cap the uptrend scenario here. Then we have a scenario at the moment where traders might be cautious ahead of the US macroeconomic releases. So traders might be waiting for the US data to come in before placing any aggressive bets. We are talking about the ISM manufacturing PMI, the non-farm payroll, the average hourly earnings, and of course, which other one is that we are looking at? Fed official speeches, then the ADP employment change. So these are major events from the United States which could cap the uptrend scenario, making the market go through an extended sideways trading activity. So as you can see, of course, since the beginning of the week, the market is looking a little bit indecisive as market is caught within a range bound structure. So we might see this continue for a while. So that is why as soon as price moves significant in our favor, let's secure some profit, as price may snap back to our entry or even go further to the downside. Now, if I want to be selling the XAUUSD this week or today, whichever case it may be, I will only consider selling if price takes out all the buy positions at the 2,857.50. So I want to see price break down, return to 2,857.50 before I can consider selling the XAUUSD today. So that is my simple view on the XAUUSD. We have a simple trading setup on this particular asset. Price is confined within a range bound structure, a $20 range bound structure. So we'll continue to monitor how the market reacts to the structure. So the negotiation is still ongoing between the buyers and the sellers. So we're looking forward to see who is going to win this tussle. Is it going to be the buyers or is it going to be the sellers? Note, a breakout retest of the resistance line confirms that buyers are winning. A breakdown of the support line confirms that sellers are winning. So let's keep watching, let's keep monitoring, and I will be updating us accordingly on both my TradingView and Telegram platform if there is anything new that comes into play. So I wish us all the best of luck on the XAUUSD. So if you have any questions, feel free to drop them in the comment section. I will take another 5-10 seconds off to see if there are any questions before we start rounding off on today's Forex Morning Mastery. Then that reminds me, I will be running the Go-Go Challenge today. I will be scalping this gold market today within this range bound structure. If you want to be part of that session, come watch me do it live right here on this YouTube platform. So I look forward to seeing you guys during the Go-Go Challenge. I will be sending the link about an hour 30 minutes from now when I'm about to start the session. So in the absence of no questions, I guess we are all on the same page. We've duly marked out these levels accordingly on our chart, and let's exercise patience and allow these structures to mature. So we have about 3 assets we are monitoring for this week: the USOILSPOT, the USDJPY, and of course my favorites, the XAUUSD, and all of which we were able to identify simple trading setup to help us navigate the first half of the week. So let's see how the market will play out. I will definitely be updating us accordingly on both my TradingView and Telegram platform. And for those of you who joined us for the first time, I hope you were able to gain 1 or 2 things during the course of the session. If you did, I look forward to seeing you in our subsequent edition. Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure to have a well-defined risk management strategy in place. So it's on this note I would like to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.